Bala, United Spirits conference call has begun. Remember, that stock has been in focus since its earnings. Yesterday, it took it on the chin.
It grew by 7%, even as the overall net sales of Popular remained flat after adjusting for the operating model changes. During the quarter, we have delivered underlying gross margin improvement of 266 bps, fueled by productivity savings, pricing and better mix. And that has enabled us to more than offset the adverse impact of inflation and GST. In fact, the continuing improvement in gross margin and that journey is something that we are particularly pleased about. The gross profit improvement has allowed us to continue to accelerate investment behind our brands, and you would have seen that this quarter we continued the journey of enhancing our marketing investment, which was up by 30%. And specifically in this quarter, we invested aggressively behind two big opportunities that present themselves this quarter, IPL and the FIFA World Cup. Despite the increased marketing investment and the investments that we have made in improving our factories in the current quarter, we achieved an underlying EBITDA margin improvement of 127 bps versus the previous year. We continue to bring in financing cost efficiencies through lower debt, improved mix, and better rates. And our interest cost, therefore, for the quarter was down 20%. The profit after tax for the quarter was 81 crores, up 29%, primarily as a result of improving operating performance combined with lower interest costs during the quarter. I'd also like to touch upon our recent decision to acquire a 26% stake in HipBar. HipBar is a technology startup, and you all know how important this space is for the future. So it's a technology startup in the alcohol space that aims to solve some of the logistical issues faced by consumers in our industry, and that's to do with accessibility. It offers them home delivery, store pickup, and a digital wallet, depending on the area in which they live, and enables online age verification, thereby improving compliance, which is a plus for the regulators. Currently, HipBar operates in Bangalore and Chennai, and we want to support their ambition to expand in other states. And I would encourage actually each of you to check out the HipBar app if you are based in these cities or when it launches somewhere near where you live. I also want to take this opportunity today to touch upon some rumors and unsubstantiated claims that have been plaguing our industry as well as United Spirits over the last couple of weeks. And this has impacted our stock price more recently. The first one is the possibility of ENA coming under GST. Now, it's interesting that there was so much of speculation on this, but, there was not even a reference to the matter during the most recent GST Council meeting on the 21st of July. In fact, it wasn't even on the agenda. Now, while we can't control the final decision, I have to say this, that the industry is continuing to work with key state governments to provide them the relevant data-based arguments against the inclusion of ENA and GST. And I can tell you that there are several states and very, very senior ministers in states who are favorably disposed to opposing the inclusion of ENA under GST. Similar to this, last week, there was another media article that one of the incumbents in our larger industry was liable to pay GST on the surplus profit received from its contract manufacturing. Okay, and this was something passed by the Authority of Advanced Ruling, the AAR, in Karnataka. It not only was interpreted to also extend to us, but its potential impact was also grossly overestimated. I want to clarify that this ruling is not binding on us. There are multiple rulings by the tax tribunal in the past, including a ruling by the Supreme Court, which clearly upheld that the surplus is not taxable. Basis this and the legal opinions that we have received, we remain confident so as to maintain that position. I would like to reiterate that the financial performance of the company has steadily improved over the last few years, despite all the challenges that we have spoken about in the macro environment. Looking ahead, we will continue to pursue our strategy and invest behind our brands as our P&L now allows us to do that. And hopefully get another step closer to our ambition of our medium-term ambition of double-digit growth and delivering mid to high-teen margins. So with that opening comments, I am opening up the lines for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. Participants who would like to ask questions, please press star, then 1. The first question is from the line of Avnish Roy from Edelweiss. Please go ahead.
My first question is on ad spend. So last 3 quarters it has been 11.5%, 10.2 and 10.5% of the sales, while it was 9.2% in FY18. So is this the new normal and what's the split between ATL and BTL in this?
So, Avnish, hi. So, BTL is completely separate and that's netted off sales, okay? But as far as the A&P is concerned, which is the number that you are seeing here in the P&L, so I agree that, the A&P spend this quarter is probably towards the higher end of what we would like to spend. And that was because there were opportunities to spend, and you must have seen visibility of our brands on the 2 events that I spoke about. I have said earlier that it is unlikely that we will, on a steady-state basis, do an A&P more than 10%, right? So 10 is about the max, and I don't think we'll go lower than 9. Having said all of this, I feel that we are beginning to see recovery in our business on the back of the investments that we have made, and I feel reassured that whatever decision we took to enhance ad spends has actually started paying back. Now, we'll suck and see this. As you know, this is about management judgment beyond a point, whether we spend 100 bits more or 100 bits less. We will suck and see this. We don't want to overspend. We don't want to underspend. And if we feel that we can sustain the right momentum...
That was the management at United Spirits explaining why the ad spend was higher also in the